RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief for, where are we here? Monday, TGIM. What? No. Just another manic Monday. 29th of July. So kiss that month of July goodbye pretty soon. Who we got here? We got Nuri is over on the YouTube page like a boss. Lori McLeod. Hello, Lori. And hello, Mark. I don't know how many people we've got. Hey, hello, Gills. Actually interesting. Well, why does it say no data? That's always a good sign. Oh, is that silly green screen nonsense happening again? Oh yeah, there we go. All right. No idea who's watching this. Doesn't seem YouTube is letting me know. Oh, there we go. There's a half a dozen people here. So happy Monday morning, TGIM. Hope you all had yourselves a great weekend. Of course, marching our way through the latter part of July and the summer. Hope you're enjoying your summer. Ironically enough, I'm surprised Microsoft usually tells you on the screen here somewhere. But yeah, the weather here is not very hot. So I'm not quite sure what happened to the global warming memos. But the west coast of Canada is not getting the memo this year. Anyway, kind of a uppy downy kind of market state. It is Monday, so unfortunately with Mondays, you really want to take a lot of what you see with a grain of salt. There usually isn't a lot of news out on Mondays, and today was no exception. Econs, we had Dallas Fed Manufacturing Index come out, and we have been talking about this quite a bit recently. Actually, here, why don't we do just a quick overview? We'll take a look at the breadth. We'll look at the econs. Like I said, talking about Dallas Fed right now. Quick overview of anything that's really standing out. And actually, we should probably mention the US dollar index itself has quite a pretty little inverted head and shoulders working. So I think that probably explains a lot of what we're seeing in the market today. BTC price action. Of course, we'll probably finish off the video with that. Topic specifically, as I had said, kind of a quiet news day today. And tomorrow and Wednesday, we will be mired in FOMC. And of course, latter part of Wednesday, we'll probably do one of our interest rate shows. They're always kind of fun. Sit and listen to what Uncle Jerry has to tell us about the state of monetary policy down in the US. And interestingly enough, I do like to follow this website. Not really many people on TRI like to follow this site. I'm not quite sure why not, but I like it. But anyway, and sort of a general sort of what the heck's happening here. As the headlines here suggest, I mean, everybody's waiting for FOMC. And really, I think the question ultimately is, I don't think there is even a debate about them doing anything with interest rates this meeting. The debate right now is, do we actually do anything in September? And being able to try and predict what the economy is going to do a month and a half from now, I think that's a bit of a mug's game anyway. I really don't like how society, and I think it's simply because people who play the stock market and are obsessed about watching CNBC 24/7, it's like crack, right? And they need something. Somebody's got to be talking about something. So they spend a whole bunch of time making bets on whether the Fed will be raising rates or won't be raising rates. And of course, it's all nonsense. One data point can completely change the whole conversation just like that. So anyway, point being that didn't really have a hell of a lot of econs to drive expectations today. There is the JOLTS report that's coming up here pretty shortly. So that should give a little bit of clarity of what we're going to see. I think that comes out tomorrow from the Fed. And then, of course, interestingly enough, on Friday, we actually get the big sort of July. I think it's July, might be June. But anyway, the jobs report for, yeah, I think it is July. Anyway, early August that comes out. So probably the more important thing just in the short term is you notice, oh boy, we got a big punch in the nose coming up here pretty soon. And who knows, maybe the market rallies. But we got Microsoft, we got Apple, we got Amazon, and we got Facebook all coming out here. And I think that this is clearly the sort of topic du jour, if there's going to be anything to focus in on here for the rest of today. Over in our library, we do have this really cool little site that somebody had mentioned recently, earnings calendar. So anybody who is on the site, you can pop in the library and grab this information fairly easily if the page will load. There it is. And as you can see, or maybe you can, maybe you can't, we're right in the thick of earnings season here. So this is going to be pretty action-packed here. We got semiconductors coming up here. So if anything, you might even want to just build like a matrix of these stock screens. And usually the market will know ahead of time if it's putting in pretty good looking W's, and probably the earnings report's going to be bullish. And of course, M's are bearish. So don't see where are all those big anyway, gee whiz, look at that, how long the list is here. So we're right in the middle of earnings season. I think that's primarily what's driving the market. Having said that, Tuesday, Wednesday, we got FOMC, and so we'll definitely be watching that very closely. As a result, not really seeing a hell of a lot to do sort of day trading wise. If anything, have to be very careful on Mondays, as I've said before. So breadth, still not overly happy. I don't think we've hit any extreme levels. I will say, in the short term, we actually have gotten a bit extreme here. So you can see, end of the month, last reading for this report was the 26th. We got the currencies in the near term kind of weak. We've got the commodities kind of weak. So, and actually, nothing really egregiously overbought or oversold on the medium term. So still feels very much like no man's land. There isn't any sort of slam dunk. We've got a really easy pivot trade here to be hunting. Everything's kind of like what you see with the S&P 500. We're kind of, the slow is a little bit above the 50 line. The fast is a little bit below the 50 line. We are heavy. And if anything, I think that sort of reflects what we see out of the stock indices themselves. Actually, which one do I want? I want this one. So our ES chart, we have come off smartly. If anything, we hit a bearish AB equals CD profit objective. So harmonically, it actually makes a heck of a lot of sense. A to B, C to D, slammed into that level, of course, right into an options expiry on Friday. Get everybody thinking all the end of the world, right? And really what they're trying to do is they're trying to make as many options expire worthless as possible. Interesting, too, that we banged up into 38.2's first stop targets. So really, I'd make the argument now we find out whether this thing turns into some sort of bot setup and we get 3 higher lows to work with and we start breaking down trend lines, et cetera, and putting in bullish structure and away we go. Or do we rally right back up into things like Mountain Man? And you can see I was kind of watching for this ICT guide concept. I don't know whether this is an accurate portrayal of these fair value gaps or this market structure idea, but I think you get the idea. Higher highs and higher lows defines a bull, so we broke that. Now the question is, do we counter trend rally back up into reload zones? 61.8, I find with this ICT setup works really, really well. And notice, oh, what a coincidence. There's a nice juicy gap right there. And of course, you got a nice horizontal support and resistance. And this is the original market structure top up top here. So if this really is a bear, this is where the institutional players put the top in the market. If we rally back up into there and this is actually a top, then they'll come in and they'll defend that level. So that's, as you can see from the chart, that's kind of what I'm thinking here. And the question ultimately, this is actually really good learning material. And I was trying to convey this to the day trader room this morning. We can actually discern a lot of information. And it's not necessarily like it's going to set up a trade. It's just the market is always speaking to us. And the question is, are you listening? So how the market acts actually heading into a Fed meeting is hugely important. You know, buy the rumor, sell the news, right? Sell the rumor, buy the news. So if the market rallies into the Fed announcement, that's usually not a good sign for the other side of the event, right? And it becomes sort of a market relieves the oversold condition that was created through here. And then you get the actual Fed announcement. From what I understand, I don't think this August statement's really going to be a surprise to anybody. And Jerry's just going to say we're data dependent, blah blah blah. And then we go back to what the previous trend was. Or conversely, if we sell off and we're very, very weak into that Fed announcement, sell the rumor, then what that kind of means is, well, the market is actually thinking maybe the Fed might even raise rates. Oh, God, horrible. Oh, they're just our terrible worst enemy. Fed does nothing, and the market's oversold. And actually, it's got room then to now actually start climbing the wall of worry. So this morning's price action was very interesting in that, you know, we actually did have quite pretty breakdowns here in the major indexes. It's interesting how NASDAQ banged into a 2.618 and then just turned on a dime. I think actually the ES is still working the top, and its target is actually a little bit lower than where we are right now. And actually, the one thing that was quite interesting this morning was to watch the crude oil here. And it's interesting, actually, just before I came on this call, I had a short setup fire, and this is half the reason why I was a little bit late here this morning. So we had a short setup fire here at crude, and I've been waiting all damn morning for something to do here. We had a really nice consolidation and actually just the most beautiful trap that they laid. Had 50% of my mover thereabouts basically hit here on this dump. So I just moved my stop to scratch because I didn't want to be stressed out watching this through the daily brief and stuff. So actually, you can see that this trade's actually still working, and it sure feels like this market wants to go lower. This crude oil market, and actually, if anything, it's a beautiful testament. Crude should actually be a leading indicator here. We are technically into the greed cycle, which means that the commodities on balance should weaken. And of course, you know, crude $70, $80, $90 a barrel, that's a little bit nutso anyway. And actually the best place to show you this, I think, is over here. I think that crude actually has topped. And if anything, this is actually a pretty Adam and then Eve, maybe even a Steve, Olga, depending on your bent, maybe even an Olga and an Olga, two Olgas. But I like the idea that energy is actually you can't see it on this contract. And I'll just show you just for illustration purposes. I think that the crude oil market is topped. And actually, this is a really interesting battle point we have here on the long-term crude charts. I mean, you can see if this thing M's out, oh boy, look out below. And I mean, the irony of it all, wicks and tails like to be eaten. I don't think we're going to go back down into negative numbers anytime soon. I think that was just effery to screw over the ETF people, and of course, through insanity of that COVID and shop teachers running around with fake breasts, just embarrassing themselves. What a nutso experience. If anything, I don't mean to get off on a tangent here, but just very quickly, everybody watching this, everybody who's a student of the market, man, we got just such a beautiful lesson in how significant these Jupiter Saturn cross events are. So remember this for the rest of your life. I mean, we won't see another one for another, 15 years or so. But they are colossal pivots for us stupid humans. Thank you, sir. Anyway, point of the matter here is a double top that came in there back at the beginning of 2022, I guess middle part of 2022. 2.618 target here, 40 $42 a barrel. And you can kind of see how we're just building to some sort of crescendo here. And when this thing breaks, oh my goodness. And actually, one thing I did see that kind of surprised me was the Mexican peso is starting to come under attack, which in itself, keep in mind, Mexico derives a lot of its national revenue from oil. And of course, I've warned you about these commodity currencies. And what's fascinating about this is look at the size of that M. So I hate to say it, folks. You ready to have a shocker? See where the hell they're going to take this damn thing. And I suppose, if the 1% has their druthers, right, they're going to put the oil business out of business. I've warned you about what's going to happen to the Chinese currency. I think it's in big trouble. And I would also argue same thing with Mexican peso. I would not be surprised one bit to see this Mexican peso just absolutely fall apart here. And I think this is all predicated on energy prices basically going right back into the shitter. Ooh, and this is a great level 2 concept that we teach. How do you trade with trend lines? And we're actually going to get a market structure signal on the other side of the trend line if we go through this low here. So super, super important information here. So anyway, the point I was trying to make earlier is I think that the greed cycle that I teach is well underway. Everything's just humming along, tickety boo. U.S. economy is still, I think, fairly strong. I think a lot of the imbalances that existed through that COVID nonsense are being resolved. One area of the economy that I think just got a little bit too far too fast there was the U.S. real estate market, and I think that's completely cleaned itself up now. And what I do find interesting is that obviously there are parts of the U.S. That are heavily oil sensitive, things like Texas. And I think that Texas, ironically enough, with the falling energy price, and with the unwinding of the U.S. housing industry, the bubble that existed, but it really, in my opinion, it really wasn't a bubble. I think you're seeing that in things in the data coming out. So, the econs du jour, sort of trying to segue back onto what we're supposed to be talking about here. The econs du jour is all about today's data was data coming out of Dallas, and of course Dallas, that's the hub of Texas. And I think that things like the Austin real estate market, the way that went stupid there, that was unrealistic. It was unsustainable. It's kind of silly, to be honest with you. And I kind of fix the stupid green screen. And on the other side of that COVID stupidity, and now with energy prices softening, you can see that the Dallas area, we're seeing repeatedly data coming out of Texas is pretty weak. And frankly speaking, that doesn't surprise me. Texas was just booming there through that COVID and then through the subsequent rally in the energy markets. So we've got FOMC Tuesday, Wednesday. Ironically enough, even this kind of data point that doesn't really affect the FOMC's decision too much. If anything, I think probably what we want to keep an eye on for, they're watching obviously the labor market and the inflationary pressures from people wanting higher wages to offset the great reset bullshit that we have to go through here. So I think this is probably going to be an important one to watch for tomorrow, the jolts. And you also hear what's his face talking quite a bit about that, Powell. What's interesting is that we actually get a really important number on Friday. We get the non-farm payrolls report here for July. So I think this is I think that's the July data set. Could be mistaken, but anyway, I would imagine that the Fed probably already knows what this number is ahead of time. But it would be really interesting if the Fed doesn't do anything, and then all of a sudden this jobs report comes out relatively friendly and showing that wage pressures are relatively muted. You might find that the stock market goes absolutely crazy. But I think it's all predicated on how the market acts into this meeting. So it was selling off here first thing this morning, and you can see they brought the market down smartly here. They have brought it back, and really, I might just argue we're in a moving average sandwich right now on this 4-hour chart. Not really a trade to be done here. This is actually a dangerous trade location. If anything, I would, to set up a trade, I'd love to see the market pull back, put in a nice W against these lows. That might set up a long shot, maybe to fill in the gaps up top. But taking a trade right here, right now, yeah, it's kind of a toss of the coin whether we head up or down at this point right now. Suppose as I said, we have big earnings reports coming out here. We could probably even create like a nice little market matrix, although we are after cutoff times here. So I think we'll probably save that for the after party. Finish off this talk here with you guys a little bit about crypto and Bitcoin and all that. Still think that we testing the top end of the range was an interesting question as to whether we would be able to punch through this trend line, especially with Wall Street coming back to work. Through the weekend, we had the bump up Trump and all the speeches and stuff. And frankly speaking, I wasn't impressed with what he said there at the Bitcoin conference. But nonetheless, I think he is trying to court the Bitcoin community just to get their votes. So not really a hell of a lot to get too excited about there on the Bitcoin front. Looking at the daily chart, you can see how they pushed the market to new highs. And I was talking to you guys, I think yesterday, before I went out with Liam, and said that we did have short setups that came in. We had move stop to scratch levels, maybe even move stop to trailing levels. And probably aggressive traders said, look, there's a W, I'm getting the hell out of there, take the profits. I think I had said to you through the video yesterday that I was like, worst case scenario, let's just put our stop at scratch because at least 50% of the move has been traded to. And in essence, that got stopped out at scratch. Notice that overnight through the Asian session, they did take the market higher highs and higher lows, defines a bull. But then as soon as sort of Wall Street opened up, said, all right, we're back to business. Boom. Just absolutely, completely bitch slap this market. This is what I'm sort of afraid of here. And this is why it's so dangerous to take these trades at these trend lines. And I know there was, if anything, please just take, this is if you want to learn how to get better at this. If you're just here for edutainment, well, just sit and watch, no big deal. But if you're actually here to learn how to become a better trader, take a screenshot of this. And I mean, like, how many times do I have to tell you guys, don't take trades at trend lines because you're going to get your head handed to you. And here they just did it 2 times in a row. to the poor old crypto kids. And every time we come up to these damn trend lines and we start flirting with them on the other side, crypto Twitter and all the kids, they all start going crazy and, it's a bull. And sure enough, they just got bitch slapped again. The interesting thing about this, though, is as I had said, if they sell the market off into the FOMC, that's actually bullish for the other side of the FOMC event. If they rally this thing into the Fed, then that's bearish for the other side of the Fed event. So this is actually really interesting price action that's going on here. Now, it is Monday. So is this just a case of, things went maybe a little too far too fast and, cheap liquidity running stops up top here for the Wall Street set? If we go and look at sort of like what's Wall Street thinking here, this is the Bitcoin futures. And again, we can't get bullish of this thing until we actually see a W on the other side of this trend line. So this doesn't count. We're just not there yet. It is interesting how we backed up into this uptrend line off of these previous sort of key pivot lows. It's not a valid trend line. I would consider it just potential, but nonetheless, looks like the market likes that as a pivot level. And really just the question here is, I mean, you're a glutton for punishment. You saw how I was hunting a short there earlier on the cash market. Do you get in there and hunt shorts again off of this particular price action? What this would imply, and again, this is kind of like what I showed you with the stock market, is I think this is another one of Mr. ICT's kind of concepts where, higher highs and higher lows defines a bull. We went and smashed through that market structure, and we're doing a lot of technical damage here. All of these kilos all getting smashed. Keep in mind, this is a 9-minute chart. If we go to like say a 30-minute chart, you can see it a little bit better there. And if anything, I'm noticing is this a lot. Like they did this exact same thing to Bitcoin last cycle, right? Where they took the market up to new highs. I think that was right there. And then boom, straight down. And it doesn't surprise me. I mean, keep in mind, Mr. Fink, he's just playing with this thing right now. But I might argue that, geez, they might even come down and close down below here, which would be even more bearish structure. And what a big surprise. All they did was they just ran up the market, made sure to clear out all of these, and then boom, straight back down. And the irony of it all is they're probably just doing things like 50% retracements. I'm not going to ever tell you that trading is easy. It is not. This is a difficult profession. And there are a lot of people in this world that just can't do this job. So don't kid yourself. This actually is just business as usual. I didn't really have any setup that actually came in here, so I just can't do anything. But the fact that they're busting all this structure here means that if we get a counter trend rally, back up into Mountain Man, and then we start doing things like, well, actually here, start doing things like bearish divergence, where you look at your indicators and they're making lower highs while price is making higher highs, and then you get an M. Well, there's going to be a setup, and Brian will be in there, back in there hunting. So I guess probably the biggest message out of all of this is there's that damn trend line, right? That we've been talking about. Jesus. I mean, what is that? Didn't I say it's like 19 weeks? This consolidation's been going boom, 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 boom. They just keep fighting at this trend line. So I don't think that the war is over by a long shot here. And if anything, a little bit worried that, all of this is it's just all fluff here, and they're just effing with the kids' brains, which is such a shame. Ethereum, this one's actually still working away. And if anything, this is a beautiful analogy of just patience and discipline. You strap on the trade off of the original breakdown. There it is there. You take partial profits at things like 2 to 1. Make sure to pay yourself for your efforts. Put your stops at scratch. We came up and put in some pretty respectable bearish structure. just below that scratch level. So I'm like, all right, fine, we'll move our stop to there. And really, my job right now is don't do anything. Just let this damn thing work. What I did find interesting, of course, that same kind of, ICT concept, higher highs and higher lows defines a bull, and boom, they smash that straight down. You can kind of see that. I think he likes to call it his fair value gap, but you can see where the institutions put the top in here. They just went into free fall. So really any kind of counter trend rally back up into this original topping zone, right? We would call this this is the actual structural fail level. And I know actually you used to work with guys who would just hit clothesline levels. In this particular case, I think that they hit this low here, this tail low, and notice that was Mountain Man, and that was basically the end of the rally. And of course, it was right up against the downtrend line, and then boom, back down we go. So I don't really see anything changing here. It's just big hurry up and do nothing. And I've made reference recently that in a weird sort of way, I think Ethereum, number one, Mr. Vitalik said that he doesn't like his supercomputer to be super expensive. So if anything, he would actually probably prefer that Ethereum price come down so that his supercomputer is more competitive on the sort of blockchain competitive landscape, if there is such a thing. So interestingly enough, I think that there is a competitor that's coming on the scene here, and it's this good old Solana. You want to see a cool image? Holy moly, look at this. So I don't know whether I'm really necessarily bullish of Bitcoin, but I remember we had this one guy in our education program, Dan, recently, and I know he was uber bullish of Solana along with Colin, and I think the group that they work with. And I, crazily said, I mean, God, this thing's probably going to be $1,000 by the time the end of this cycle comes around. And interestingly enough, you can actually see the next leg of this honking bull market trying to form here. And look at these insane upside objectives here. So if we get this kind of move, you can see the bot entry level. You got one low, you got two lows, you got three lows. You actually have a double bottom to work with to front run the bot. So everything's lined up here. We're even on the other side of the trend line. And look at the upside objectives here. Holy free holies. No guarantees from the management. All right, all we do is we trade setups. I mean, the interesting thing is this setup sure looks like it's setting up. So with that said, I actually kind of like the idea of a Solana versus Ethereum spread trade, where I mean, I don't know whether the momentum is totally clear, but this sure does look like a nice cup and handle. And of course, this would be like buying Solana and shorting Ethereum. It looks like a pretty chart. I'll tell you that much, boy crackers. And I do like how the volume is actually trying to ramp up here. You're getting higher highs in the volume bars. So let's see if this has some traction. I'd also say too, though, is we got to wait for the market to get on the other side of the Fed. I'd also say too, just sort of finishing thought, keep your eyes peeled. Of course, if you play the shalt coins, the bottoms are coming in. So, there are some names that, of course, Fjord is, if I'm not mistaken, a lot of these semiconductor names are coming out with earnings. AMD, I think, is on deck. Stewart is he loves his RNDR. You can see the double bottoms that are trying to form here. Could even make an argument there might even be a bot set up because I got 1, 2, 3 higher lows. So, we don't really have trend line breaks here per se, but this does look like a triangle that's coming to fruition. Usually they say about 2/3 the apex of the triangle. So keep your eyes peeled for RNDR, see if it actually has some fireworks in store for us. In fact, actually, Stuart will be on the call tomorrow. Good opportunity for you to hear from what I would consider one of the best crypto analysts. And we're awfully lucky to have him here as TRI's CTO and all around swell guy, Stuart. So if you have questions about any of his FA names, be sure to tune into the call there tomorrow. But even some of Julian's social media influencer names, This guy looks like he's starting to W out, getting ready to rock and roll. So you can kind of see that the summer silly season is it's happening. I mean, this is the irony of it all, is that I warned all of you, as of July 4th, look out. As soon as we get on the other side of that holiday weekend, you should start seeing the bottoms coming in, and we're just seeing them one at a time, all slowly coming in. And it's finish off this free broadcast here for you. Let's pop on over to the after party and we'll look at some of this stuff in more detail. But here's just a whole bunch of these little poop names over on the Solana network, the meme coins. One of my favorite, potato. And this is kind of a fun one. Adam and I, we have a fun joke. I think he's long about 5 trillion potatoes right now. But you can see, look at the volume ramping up here. And I mean, if this thing gets ready to go, holy crap. Anyway, you can see the double bottom that came in. So he's off to the races. But, and I'll just give you a nice little treat. This retire. I mean, this thing here, it is double bottoming as we speak. And I think the meme is retire if you buy this, right? Because you'll get rich buying this meme coin, blah, blah, blah. But I mean, you should look at the chart. I mean, I don't know. You tell me. Does that not look like a W? So there it is. I mean, they're coming in here. No guarantees from the management. You can see I've been doing my little nibbles all the way along here. I threw in another bid on this thing, just adding to the pile, little old lady style. And I wouldn't be surprised, August, September, probably late August, we're going to get these big honking rallies again. You'll be banging out doubles and all that. So you can see them. They're happening right in front of your face. So, okay, why don't we leave it at that? Have yourselves a great rest of your day. Gave you a little extra there today, but it is Monday. So we had quite a bit of development there on the Bitcoin chart. So I wanted to talk to you guys a little bit about that. And of course, we got Fed midweek. And if anything, we'll probably do one of our midweek shows heading into the Fed event and through it, listening to Jerry. So if you kind of like to learn how I follow and track the Fed and sort of the key things I like to watch for and listen for through Fed announcements, be sure to tune in for that as well. All right, have yourselves a great day. PMA for the win. Slow and steady wins the race. All the best. Don't take no wooden nickels. Remember what your number one job is. All the best. Bye for now.